We are now joined by Nick Timberlake, Global Head Emerging Market Equities with HSBC Global Asset Management, and along with him we've got William D. Wilder, Chief Investment Officer and Strategy Head with PNP Paribas Investment Partners. Gentlemen, good morning and thank you for joining with us. Nick, let me kickstart the discussion with you. How has your view or weightage changed for India over the last 3 months as part of your BRIC fund?
We like the Indian market. We have not had as much exposure to India as we have today for a number of years now. About 27% of the portfolio is exposed to India, and it's focused on particular sectors, which we can get into if you're interested. It's our second favourite market in a BRIC context. We still marginally prefer China over India.
William, I want to get you in as well. How is India being viewed amongst the emerging market basket, and have you increased your allocations to the region?
Well, India is perceived as a bit the leading example. If you look at what happened over the summer last year and then since then, what you see is that India has been the first country that saw a stabilization followed by a strengthening of its currency. It has also seen a very important rise in the equity market. Now, this is explained by a combination of, one, monetary measures, secondly, the credibility and vision of the central bank, thirdly, measures to radically reduce the current account deficit. I'm thinking about gold imports. A view that inflation, although still too high, is actually stabilizing and will be followed by a decline. And then finally also the expectation that on the political side, with the elections, there will be change and there will be focus on the structural efforts that the country needs to undertake. So when you put all this together, what you've seen is that India has actually been leading the efforts of other countries and has seen changes occurring, changes in foreign investor sentiment occurring more rapidly there than in other countries. If you then jump to the second one, like Indonesia, for instance, there it took some more time, but even there now sentiment has improved and foreign capital is again flowing to that country. So it really shows you how sensitive foreign capital flows are to doing the right things in terms of macroeconomic policy management.
Right, Nick, you won't comment on politics, I know, but how are you tying the risk in elections with your India view? Does it mean, what does it mean for your portfolio and overall risk strategy towards India?
Okay, well, we're not in the business of trying to predict what the Indian election result will be. I think that's a pretty challenging thing to do. There are polls that you can listen to, which paint a picture suggesting that the BJP-led opposition are likely to take power post the elections, but these polls historically have been very unreliable. So we need to bear that in mind. Obviously, the Indian population is a young one, and I'm told that somewhere in the region of 10% of the voters are new voters. So, again, I think there's not a huge amount of data which really supports how those young people will place their votes. So it's early days really to be predicting the outcome of an election. What we would prefer to do is look at the individual companies. The way we think about companies is we're interested in that combination of valuation being low and profitability being high. And if we can find companies with high levels of profitability and low levels of valuation, then we're going to be interested. And there's lots of those in India today. So, if we have a change of government, maybe that will be an additional tailwind, icing on the cake, but that's not really how we've set our portfolios up to expect that outcome.
So, William, what do you expect from the 2014 elections in India? And is this rally in Indian markets pricing in a clear mandate, a strong coalition or a Modi-led government?
Well, ever since there was talk that Mr. Modi would play a key role in the political landscape going forward in India, of course, the market has reacted to that positively. So I can only say that there has been quite a bit of anticipation and that means that if he would come out of the elections as a strong man, what then will be very important is to kind of hit the ball running, and that means that the first 100 days, the honeymoon days, will be very important. You see that typically in other countries as well, when there is political change, that investors expect that credible announcements are made very quickly and decisions are taken very swiftly, because if that were not to be the case, what you would then see is a wave of profit taking, eventually leading to disappointment. So that is, of course, the interesting situation in which we're heading now. There has been anticipation, then we would need to see confirmation, and then I think you would have a move back towards focusing on the fundamentals about growth and about inflation, and with that, of course, having an impact on the stance of monetary policy.
So what do you expect the Indian markets to do post-elections, which is after May 16th?
That very much depends on what will happen in terms of policy announcements and policy decisions. I think what is absolutely crucial in an environment where there has been a lot of anticipation already is that the decisions which are announced and measures which are taken, that they are sufficiently ambitious and also credible. You need to have the good mix between being ambitious, being decisive, but also being credible. And in such an environment, you can then have a market that continues to do well. Also because by then you would expect that cyclical environment would gradually start to bottom out, which would then, of course, give investors more confidence about the earnings outlook. But let me come back to the point made earlier and emphasizing that is a combination of decisive, credible, and swiftness, which is important to see in terms of policy environment after the elections.